All right, everybody. Episode 5 of the Rivian Report Podcast.
Rivian Report.
Here with Dan, we got a lot to talk about because this episode is one we have received delivery and production numbers for Rivian. So we got a lot to unpack. Stock obviously made some movements based on this. And there's a little mixed feelings about these reports. And we're going to give you, dive in and give you our insights. Now, before we do, if you haven't yet, smash the like button if you're listening on YouTube and watching this video. And if you're listening on Spotify, give us a follow. Follow our Spotify stream. We noticed that if you type in Rivian, we are the third podcast that pops up. So we're excited to be getting closer to the front. And one of the reasons we started it is there's not enough conversation going on about this company. So let's get into it. We'll just start off with the actual raw numbers. So Rivian's Q4 2023 production and delivery numbers came in, produced 17,541 vehicles in the quarter, and they delivered 13,972 vehicles. It's a 7.5% increase in their production from Q3 to Q4, so increased production, and a 75% increase in their production year over year from Q4 2022 to 2023. So they are growing nicely. Production, which is, in our opinion, the most important thing, because we do believe they are demand constrained to an extent. They're going to release the actual earnings report, just so everyone knows, February 21st, we believe. So we got a little over a month before the actual earnings come out. And a nice fact I actually saw, I didn't do the math myself, but I saw Rivian Updates, great account to follow on X, posted its 6.5 Rivians off the line every hour. So something to keep in mind as their production scales, just thinking on a lower scale, it's 6.5 cars coming off their line every hour. So they are increasing that, and that's pretty cool. So Dan, you have anything you want to bring up before we get into some of the reasons and whatnot, why we think their numbers are the way they are?
No, not exactly. I just wanted to, this is kind of just a question for you because I have a feeling you know this better than I do. So if they're currently producing 6.5 per hour, what is their production target for the current R1 platform? Do you know? Like, maybe not hourly production, but we can extrapolate.
So they haven't specifically broke out what R1 versus EDV line specific numbers. We don't get those numbers. They don't break it out in their report, but we do know that when we're looking at like what they expected, they guided to 54,000 cars for the year at the end of Q3 once everyone already had Q3 numbers. So they did beat that number, just to be clear. When we're looking at their actual full year, I believe it came in at over 57,000. Look up the exact number, but I think it was over 57,000 produced, and they guided to 54. So they did do better than what they were expecting to do capacity wise for the year, and I think that was intentional. I think they knew they would do better. Everyone knew they wanted to beat each time. They guided to 50, pushed it to 52, then 54, and they obviously beat the 54 at 57. So 57 plus.
So if they are producing 6.5 cars per hour, that's times 24, that's 156 per day, times 7, you've got 1,092 per week, times 52 weeks in a year, 56,784. Basically exactly what they did. So sounds like an accurate number. So
yeah, they if we look at their deliveries per quarter, because some people are upset, obviously, let's just get into it. Some people are upset about that they didn't deliver as much as expected. I have a few thoughts behind it. So to get an idea of, even though they produced more in Q4 than they did, let's say the quarter before that, they produced 16,304 vehicles. Quarter 4, 17,541. Well, the thing is, in Q3, they actually delivered more. So in Q3, they delivered 15,564 out of the 16,304. And on this quarter, they only delivered 13,972 out of the 17,541 produced. So my thoughts are this: that's the one reason why I think this stock went down. Everyone knows the production was a beat, deliveries were a miss. Now, I read an analyst, I think might be wrong. It might have been Dan Ives. I forget who just said it, but one of the analysts was writing that, although they were low, the analyst expected deliveries to be slightly low. And average analyst estimate, I forget the exact number, but when he looked at it versus the average analyst estimate, it was a 1% miss. So, it's not, we're not talking a big miss percentage wise compared to what the market expected on deliveries. It was only a 1% miss. And then you start to take into account there are things like, we saw Amazon a quarter ago in Q3 when you listen to the earnings report. RJ said
Rivian Report.
Yeah, I'm sorry, the Rivian Report. RJ said that basically Amazon does not take deliveries of the EDV in the holiday quarter in Q4 because they basically take the deliveries they need in Q3, and they're focused on getting packages for the holidays to everyone. They're not focused on increasing the amount of, that's not the time they're taking delivery of new cars. They need to have their EDVs ready and running in Q4, and that's where all their focus is. So I don't know if that means like they took just a couple or they literally took zero. Like, he doesn't tell us that, and we don't know those numbers. We know there's a pilot program with AT&T that came. I'm sure we're going to get other pilot programs coming out. But we saw a photo of a bunch of Amazon EDVs in a parking lot. I'll put it up on, if anyone's watching the video, I'll put up a photo.
Actually, I followed the channel. It's like a drone flyover, which probably really would be really good for us to continue checking up on kind of consistently. But they did a nice drone flyover. That photo isn't even all of them. And it's like somebody sat there and counted, and it was something like, 3,000 to 4,000 EDVs in the lot, which is exactly what you and I figured out. That's exactly the number of vehicles that they missed by, essentially.
Yeah, so exactly. And these aren't just EDVs that are like, for example, for any company, they actually already have the Amazon skins on them or whatever. They have the Amazon logos all over them. So these are
destined to be Amazon.
Yeah, trucks. Exactly. These are Amazon EDVs. They're destined to go to Amazon. So if Amazon didn't take them, it's not like Rivian's going to stop producing them. They know Amazon's already committed to the 100,000 total. They know they're going to, it probably gives them the ability to, in Q1, maybe focus more on making the EDVs that are not for Amazon to these other pilot programs. And they just know, hey, we made a bunch of these Amazon EDVs in Q4 that were not able to get delivered based on Amazon's current needs. And then in Q1, they have that delivery path. They know those are going. And I wouldn't be surprised if we saw a nice chunk up in deliveries, more than expected, possibly in Q1 due to that. So
I bet you we're going to have a beat. There's going to be less of a gap between production and delivery numbers. Yeah. Investors will like that. Everybody buy a Rivian stock right now.
Not financial advice. So, I definitely think that's a huge contributing factor, is that there's probably a good amount of those are EDVs. We do know, just from like a demand standpoint, the R1S is obviously like their most popular demanded product. It's the one that's got the longest wait list. If you buy one now, you're probably not getting it for a year or something. And the R1T, I mean, that's the one that is, I think everyone has the bigger question. If we're going to be pessimistic about something, I've heard only good things, people who, I'm not a truck guy myself specifically. I don't really love pickup trucks, but if I had to get a pickup truck, it's the Cybertruck and it's the R1T. Those are the two I would go, to, depending on your style and taste. So, and I am obviously taking a Cybertruck, but more so because I don't look at it really as the traditional pickup truck. I think the R1T is a different market, really. So the R1T, they do show you can get delivery quicker. Obviously, it's like ready for delivery. Now, I know their production is basically 3/4 R1S and 1/4 from my understanding. It's like 70% R1S, 30% R1T. And I think it's intentional. They know they have a big backlog of R1S. They know there's more orders for R1S that come in daily versus R1T. And my guess is that they've kind of narrowed it in where that 30% point is kind of fitting with what current demand is. And that's why you're able, there's probably some slight backlog, but not much where like, you can get it in a couple weeks because it's always a couple weeks out-ish.
Right.
So, 2 to 4 weeks or whatever that number is.
So I actually, before we hopped on this call, I was watching one of the YouTubers I like to watch, Hoovie's Garage. You familiar?
No, I don't know them.
Hoovie's Garage. He's just a car guy. He's not EV focused whatsoever. In fact, I don't think I've ever seen him do an EV video. And essentially, his video is titled like I ordered 2 Cybertrucks. He got the configuration option or whatever for 2 Cybertrucks, which he ordered, and he is talking about that while reviewing an R1T that he's got. Like I said, not an EV guy, but he just raves about the interior quality and this and that. He went and sat in somebody else's Cybertruck, and it's obviously not on the same scale whatsoever. The R1 platform is super nice. And so in terms of what you were saying before, like if I were to get a pickup truck, it's either the R1T or the Cybertruck. I don't know if that's going to be such an easy decision for others. Like you and I think that the Cybertruck is super cool, but a lot of people who want a luxury truck, pickup truck that are in the market and they're willing to spend 80 to 100 grand on it, they might not be down with the minimalist, feel of the Cybertruck. And the Rivian just kind of has that material, that luxury feel. So you and I were talking, if I had to choose one of the 2 Rivians right now, I would take the T. I would take the truck. Really? And I'm not a truck guy, I just think it's so cool.
Yeah, and your favorite part is the gear. Right?
You didn't have to mention that. You didn't have to mention that part.
Yeah, no, the gear tunnel is cool. I mean, it is cool. It's a really unique feature. So let's compare to, since we did get also numbers, Tesla also had their numbers come out, and obviously Tesla is a much larger, further down the road scale than Rivian. Tesla's guided 50% year over year growth rate, which they're not actually doing 50% now, but if you took it from the day they said it and you go 50% year over year, they would have to hit 1.8 million cars for the entire year of 2023 to be on track with that. And that's exactly where they basically hit. Their total annual production was 1,845,985, excuse me, and deliveries at 1.808. So basically just 1.8 million. For the quarter, they're doing basically 500,000 cars a quarter now. It's 494,989 for production and delivering 484,507. So you have about a 10,000 gap in vehicles, 10,000 vehicles gap in production to delivery. So, which is a much, much lower percentage than the gap that Rivian currently has, but there's a lot of growing pains that come with scaling. Yes. So, and another thing we didn't mention is they did mention there would be a small shutdown in Q4. So they had that. It was a minor one. I don't know if it lasted a couple of days, if it lasted up to a week, but it was a minor shutdown. They said it was going to be very minor. The real
it was worth mentioning, so it wasn't an hour.
Yeah, exactly. It was worth them pointing it out in Q3, and they're going to have a bigger one in Q2, which is a major shutdown because it's going to basically stop everything, and they're going to make huge radical changes, which will be obviously extremely painful to that quarter, my assumption, Q2 and possibly Q3 as they scale it back. But it's necessary to get the gross margins where they need to be. There's going to be some huge changes. There's going to be a lot of upgrades going on to that factory
for the production line for sure.
Yeah, so that it's just part of the game. You need to do what you got to do. You got to make your lines efficient, and they're upgrading them for the better. So they'll be able to make a lot more cars, and they'll be able to make them more affordably. And ideally, I mean, we'll see what comes from it. But from my understanding, it's not like just cutting cost of things. You're also making them better. I think the vehicles will probably, people who take delivery after that changes might have certain tech and things in their car that don't exist today. So I think they may be better cars as well. Not that they're not great as is. So after this news, let's jump into real quick what happens to the stock, right? We see the stock drop pretty significantly. It was, if we take a look prior to the report, it was like $23, $24. Very quickly, first day after announcement, drops to like $21, which was a pretty significant drop, about 10% on that trading day. The very next day, it was down around 6% or so yesterday. But then it actually only ended down maybe just under 4%. So, excuse me, recovered some of that drop, but still down about 4%. And then we look at it today, and it's down another 4%. So now we're under $20 a share. It's at $19.50 a share. So that is, the stock is definitely basically come down. Yeah, it got beat up. If you look at the last 5 trading days, the stock is down 17.5%. Now, we do have to mention, prior to the new year, stock was up like 40% in like a month. So it shot up huge, gave back a lot of those gains now. But it's still, it's for the start of the year, it's putting itself in a pretty bad position to do good in 2024, because they have to make this all back and then do good. But I'm optimistic that there are some pretty big catalysts that I think will make this stock go up significantly, and that's why I continue to add shares. And I've bought more shares since the additional shares I bought. So, I bought, like I said, 20,000 shares before. That brought, on the Robinhood account, went from 30 to 50,000 shares there. And in the last 2 days, I've basically added, I'm at like 57,000 or so. I've added another 7,000 shares.
Wow.
Selling calls against all of them at high, around, most of them around the 27.50 price point.
For February?
For February. So just collecting money on them, in the meantime, but I continue to add because, not everyone should do what they feel comfortable risk-wise with, but I long-term think that these are buying opportunities. So if
do you want to do a what I'm spacing here? What's the model? The discounted cash flow?
Discount cash flow models, like,
yeah. Do you want to right? Do you want to run a couple of those, or
yeah? So I mean, I've done some in. Yeah, we're not going to do it in this video because that will be like running through the whole model.
Video in itself, yeah,
could be its own video. But yeah, I have a few discounted cash flow models that just basically, we could break it down, to be honest, just so our listeners have an idea of where things could be. We could break it down a little more simple, just without me pulling up a model, just on like back of the napkin math, pull a calculator.
Do it in your head, man. Grab a napkin, grab a pen, do it in your head.
Look, on a simple way to look at it, and this is what I used to do with Tesla a lot, is just figure a number they're going to be at in 2030, right? When things are more scaled. R2 comes out, first phase of R2 in 2026, supposed to have 200,000 cars. Phase 2 shortly after brings it up to 400,000 cars. Phase 3 brings it to, it's a 3-phase thing, maybe 600,000 cars. You got 150,000 vehicles coming out of Normal, Illinois for R1.
All the while they're scaling EDV, hopefully R1 platform as well, like you said.
I mean, you're at what, 750,000 cars between Georgia and Normal, Illinois together at capacity. Maybe it's 750,000 cars. My guess is, as the years go on, it's not like they stop growing. They announce another factory in another location. Maybe expand it's in Europe.
Factories.
Yeah, who knows? Maybe they open in Europe a factory for Europe expansion with R2. There's a lot of things that can come. We know they were looking at opening a factory in Europe with Mercedes for vans in the past, and they ended up deciding, let's focus on our stuff. Let's not worry about this partnership and making something with Mercedes, and actually pulled out of it. But we know Europe's in their plans. They're going to be a global EV maker. So if we just take some raw numbers, I mean, I think in 2030, we're looking at a 750,000 to 1 million vehicles delivered, kind of area. Maybe they, by 2030, whatever that third factory is on phase one at the time, which may be a 200 to 250,000 vehicle kind of thing. So if you say, you obviously with models, you want to predict multiple outcomes and then give percentages to each outcome to kind of get yourself where things could be in a lot of scenarios. But if we run some back of the napkin math and we say 1 million vehicles are made in 2030 from them, that Tesla's going to do 2 million vehicles, basically did around 1.8 million vehicles this year, and their goal for 2030 is 20 million vehicles. That's what Elon's been pressing. Do I think they hit 20? Probably not in 2030, maybe down the road, but 90 plus million or so vehicles sold a year globally. Do I think Rivian can hit 1 million? I think there's a higher chance Rivian hits 1 million than Tesla hits 20 million. But I think Tesla will probably be around 10 million or so then. And I think they'll grow from there further. With Rivian at 1 million vehicles, you got to now put an average price point. So like, what is the
let's assume price? That most of the cars they're selling are going to be
most are going to be probably R2s, right? So average.
Let's say 45 grand average, or even 50.
Honestly, it'll be higher, and I say that just because we'll put it a little lower, but R2 is going to be a $40,000 to $60,000 vehicle.
Oh, okay.
Most people are like, so average on that, let's just call it 50, right? So now you got 50 grand as an average probably on R2, but then you have all the R1s, which are now like $80,000 cars being sold. So their average very well could be $60,000, $70,000.
Okay, let's call it 50. Let's call it 50.
I would say let's just call it 50 for the whole thing.
Mm-hmm.
Right? So when you take $50,000 per car, you're at on 1 million cars, you're at $50 billion in revenue. So now they have $50 billion in revenue. Now we don't have to do a lot of math here because management has said that when they get through phase 3 of like the phases of R2. They've guided they've done their math. They know what, they're expecting to spend and things like that. And they've guided to what it would be. They said that you're going to have about a 25% gross margin on the vehicle, and their EBITDA is going to be in the high teens, teens percentages. So 15, let's just say 15% is going to go to the bottom line after everything for their earnings. So if you take 15% on $50 billion,
$7.5 billion,
left with $7.5 billion, and now there's a multiple on that of what the company's worth. Now they're going to be still growing like crazy, so I wouldn't be surprised when Tesla was growing like crazy. Their multiple was literally 1,000 for the longest time, because it shrunk as they kept growing every quarter and every year. And they very quickly, people say, "Oh, that's crazy, a multiple of 1,000." But then you see that Tesla brought that multiple from without much work. That multiple shrunk from 1,000 down to like 70 pretty quickly. So only once a company's not growing and it's really just like, hey, this is what we can expect from this company every single quarter, is when you start to say, oh, just valued around 10 times earnings or something like that. When it's still in growth mode, I mean, you look up any really high growth company, you're going to see it has a high PE. So I would say, don't be surprised if the PE at that time is 70, 80, but don't be, also surprised if the market's just like, let's give it a 20 PE or something.
I say let's give it a 20 for now, and I think that's conservative, like you said.
Yeah,
they're growing.
Exactly. I think 20 is going to be conservative only because of the high growth they'll have, because they may be growing at 50 to 100%, per year at these numbers. Still, we don't, they'll only have one mass scale factory only that will be, and they'll be opening a second one coming. So at a PE of 20, their company's worth 150 billion as a market cap, right? So 20 on 7.5 billion. Today they're worth 18 billion. So you're less than 10x, but close to 10xer, right? You're pretty close to 10x. 180 billion is a 10xer. So there's a clear. You could be pretty wrong here. I mean, you can change these numbers up.
You could be 50% off, of your target,
and still make a ton of money.
Right. So that is an exciting prospect here as a Rivian investor.
Now, just to give you another idea, let's say they were the same PE that Tesla is today. Now, Tesla's way further down the road. Growing at Tesla's current rate is a lot harder than growing where Rivian will be. To grow from 2 million to 4 million is a bigger
one factory. I mean, excuse me.
for
factories.
Rivian, it's just one more factory does the growth for them to double their growth in a sense. Tesla has to have more than one more factory to double their growth. They have to have a few.
That's right.
So Tesla's current, even at all of what they've done, their current PE is 76.67. So let's just call it 75. If on that $7.5 billion, Rivian's PE was on their EBITDA of $7.5 billion was 75, that they would be worth $562 billion.
Mm-hmm.
Just to give you context, Tesla's worth $745 billion. Right now, am I predicting it's going to be worth $560 billion in 2030? No, but is it impossible? No. That's the thing to keep in mind. So your risk to reward, assuming they don't go out of business, which there is the chance they can go out of business, and you have to take that into your models that if things don't work out, what do they look like as a niche player? Can they be a niche player? Does someone buy them out? Well, et cetera. There's a lot that goes into it. But at under $20 billion market cap with a lot of scenarios that take them north of $100 billion is pretty exciting. So that's that when it comes to some possibilities. If we're just doing like some rough numbers based on rough numbers based on actual production numbers given out of the company and actual valuation metrics from the company at scale. The next thing you can look at is some of the news that helped push the stock down. I think, other than short sellers and things like that, the stock did get some reiterates, like Morgan Stanley reiterated that they're overweight. They're bullish on it. They have a $24 price target, but that's like a mid-base scenario. They have bear scenarios, base scenarios that range between around $12 to $32 a share. They have models for that. And then they have a best case scenario, which it's worth significantly more than that. So there were some people that came out. There was a downgrade though. Rivian stock got downgraded. And if we're looking at it, it's Wolf Research that did the downgrade. They had a buy on Rivian stock. Now they just brought it down to a hold. So they're not saying sell it, but they put it to hold. And they don't have specifically any stock ratings for their holds in their firm, they say. So basically, they don't give a price target. They just say it's a hold. And they say that it should keep up with the market. So it's kind of to me, just them not doing it. It's just kind of lazy in my opinion. That's just price target.
We don't want to guess because we don't want to be wrong.
Yeah, exactly. So the shares dropped 10% right after the report, and we see Canaccord analyst George Giannirakis or something. I totally butchered his last name. I don't know how to say it, but this Canaccord analyst was confused about the drop, saying the results were just fine. But he notes that because it was up 40% in December, there was probably some profit taking, and that probably helped with the decline.
That's a really good point. Brand new year, people want to take their profit.
Exactly. If you're up a lot on a stock, and you have the choice to sell it December 31st or January 1st, you're going to sell it January 1st, so you can avoid paying the taxes on the year of 2023, and you can deal with paying those taxes for 2024's year. So that's basically what, that sums up, I think, the delivery numbers, it sums up the production numbers, sums up the stock. A lot of exciting things coming into the new year with Rivian. We're really excited about the podcast and where we're going to be able to take it. Some ideas going in for 2024. And is there anything before we end this episode? I think this episode really was just about, let's get these numbers to everyone. But is there anything else you want to bring up?
No, I mentioned that video. I can't stress enough, if you just browse YouTube and watch some reviews and things like that. So what I like to do as I'm going to sleep and stuff at night is it's just everybody is blown away by the build quality, by the materials and just the
Great
overall
vehicle.
design. Such good vehicles. Like I love them more and more every day. So
What do you? I'm for R2. I mean, that's obviously they said that they're going to show it off in early 2024. So hopefully that means somewhat soon. I think they'll do their own R2 event. I'm hoping it's not just part of the earnings report. I wouldn't be surprised if it was, but I think it deserves its own event. And me and Dan were actually discussing a huge catalyst could be just the fact that even if it doesn't come till 2026, if they let pre-orders open, I can imagine a ton of people pre-ordering a Rivian that's a $40,000 Rivian.
I would.
Yeah, I would.
An ACS, so many.
And you want to get early in on these pre-orders because you want to be one of the first to get them when they come out. You have years. They're usually refundable deposits. So I think it'd be extremely bullish if we saw them open up a pre-order and then, a week later say, hey, it's only been a week and we got this many, pre-orders. We know how many came in. There was a ton, over 100,000 and whatnot with R1. We know there's supposedly 2 million pre-orders for Cybertruck. I imagine R2 will have a huge pre-order list, and that would be pretty bullish for the market to believe in them, and I think help the stock significantly.
Right. Even if it's not 2 million pre-orders, even if it's 150,000 pre-orders, it's huge. And I was going to say, we should do everything we can to, if there is a launch event, which I doubt there will, I doubt it's just going to be a line item on the earnings report that they're just like, by the way, R2, here are some pictures of, it's going to be a big event. We should try to go.
Oh yeah,
whatever we can do.
RJ, if you're listening, send 2 invites.
The number 3 podcast on Spotify, Rivian themed podcast.
Number 3 on first page of Spotify and Apple Podcasts when you look up Rivian. So
come on, RJ.
Hey, come on. Yeah, but that would be amazing if we could go to that. I wonder how they'll do invitations. I'm sure it'll be jam packed, and I'm sure they won't have space for us. But we'll try.
Listen, I'm sure that between us, we own more shares than a lot of the attendants.
That's for sure. So everybody, thank you so much for listening to the Rivian Report Podcast, episode 5. Still early days. We appreciate all your support. Make sure to subscribe. Make sure to like. Make sure to share. Have a good one, guys.
Bye-bye.